Bitcoin has climbed quite consistently over the last month, and when we zoom out, also over the last years. But it seems like people are starting to get scared. It seems like it might make sense to take some profit. Let's have a look at some on-chain data, some metrics most people are not considering. Now what we've got over here is the realized market cap of Bitcoin, or the average cost basis. So not the current price, but the price that the average market participant ever paid for Bitcoin. And this is much less volatile than the price itself. And what we see here as those vertical lines, that's whenever we crossed a 10x. So at one point, Bitcoin started out with a market cap of only 100K, then it went to a million, 10 million, 100 million. Now we are approaching the 1 trillion market cap for Bitcoin. We see how the recent 10x took the longest. Almost 6 years. The reason why some people are worried is because short-term people are again massively in profit. And there are times when the short-term holders are in profit where rallies tend to slow down. At least we see temporary corrections. Now again, the short-term holders might take some of that profit. But really, in the end, it's all about the long term. The question is, how much higher can Bitcoin go in this cycle? There are different models and they've got vastly different price targets. Have a look at this model, for example. It's a logarithmic regression on the Bitcoin price, and it states that Bitcoin could go all the way up to 800K just in the next few months. I don't think that's realistic, because when we look at this in a bit more detail, it seems to underestimate the growth in the early days. The price went above that trading line, and it tends to overestimate what's possible a few years down the line, right? We did not hit the 130K in 2021. Instead, we peaked out at around 60K. And so the slope of this trend is probably too steep. Probably this is overestimating how quickly Bitcoin can grow. A more realistic approach could be this here. It is not as scientific because we're simply just drawing a curved line. But interestingly enough, on that curved line, the tops align surprisingly well. So we've got 1, 2, 3, 4, 5, 6, and now recently 7 tops. Now that would imply that we don't have that much more upside, that we could already stop at 111K. And so this might actually be a legitimate reason to sell Bitcoin. This approach worked for the entire lifetime of the asset. But again, I think we will go beyond this. I think we will reach 130, potentially even 140K. And here's why. The main driver of any asset is capital flows. How much money gets into the asset. And what we see over here, that's the stablecoin market cap over time. We look at the largest stablecoins, so Tether and USDC. We add all of the minting of those stablecoins together in this chart, and then we can see how much the market in aggregate is contracting or expanding. And since October of 2023, we are in expansion mode. What we see over here, this turnaround, that was when Terra Luna and the Anchor protocol collapsed. So that was when the UST, not USDT, but UST stablecoin went to zero. And then subsequently, we also saw FTX collapse. But then since October of 2023, things are going bullish again. And so when capital is flowing into the space, that's in general good. Now, how much did we expand in the last year? The answer is 45%. Now, that's just the capital in the space. It doesn't tell us, though, how much of that capital gets deployed. So some of the stablecoins are just on the sidelines, and other stablecoins, they get swapped into risk-on assets, into altcoins and into Bitcoin. And so this here is the reason why I believe we will go beyond 111K in Bitcoin. It's the stablecoin dominance. So how much of the entire cryptocurrency market cap is currently in stablecoins? When this is very high, it means a lot of people are on the sidelines. They are not deploying their stablecoins. When this is very low, it means a lot of people have swapped already from the stablecoins to the risk-on asset. And this tends to trend in a sidewards trading range for the last 1.5 years. And we are not yet at the bottom. In other words, there are still a lot of stablecoins to deploy. And when we just compare November of 2024 to our current risk-on expansion phase, then we can draw the parallels over here. So this is how much Bitcoin appreciated during the time. Thus, this long-term trend is, I believe, likely going to get broken. We're likely going to see 130, potentially 140K in BTC. It's not a massive change in the grand scheme of things, but it still matters, right? If you now have a lot of Bitcoin and if you're invested in altcoins, seeing another 30 or 40% rally from here probably is not that unimportant. Now, besides the stablecoin dominance, besides the dry powder on the sides, is there potentially other indicators that tell us that we might not yet be totally heated, that we could potentially rally further? I think there is. So far, people haven't yet realized a lot of the profit. The long-term holders have not. Here is the Bitcoin realized cap net position change. A lot of people took profit when Bitcoin was at around 72K, myself included. Then a lot of people took profit when Bitcoin was around 100K. Also, myself included. Now, some people start to take profit again, but we are nowhere near those older highs. And again, when Bitcoin is at 130, 140K, we're probably going to be very similar in those realized cap net position change values. So we're just starting this current rally. Well, have a look at this. This is the short-term holder sell side risk ratio. If there's a lot of activity among the short-term holders in the form of transfers relative to how much they are in profit, then this is peaking. And again, we are not yet at the top because of the low activity. There is a real case to be made that we could see another leg up that's not just driven by Bitcoin, but that's further supported by Ethereum, because Ethereum has seen a massive bounce recently. It was completely out of the norm. So what you see in black is the Ethereum to Bitcoin ratio. How expensive is Ethereum relative to BTC? And this tended to trend downwards in the last year, but then recently saw a positive bounce. And that bounce was way beyond what we usually should expect. So the blue and red line is 1 sigma standard deviation. It looks at how volatile is the change of Ethereum to Bitcoin. And we've seen a very violent positive move with that bounce, something completely out of the ordinary. And Ethereum still has some way to go. There is a supply cluster at around $2,800, but I think there's a good chance that we go beyond that as well. Now, to a degree, the crypto market is just a reflection of unregulated life. As in, most gains come just to a few people, to a few assets. The vast majority tends to lose. So if you're just taking a broadly diversified portfolio of assets, we're likely going to not perform that well. Because here's the thing, crypto does not have any regulation. Everybody can launch a coin, and so there's no real barrier to entrance. And because of that, we tend to see a lot of fraud. We tend to see a lot of setups where tokenomics are rather poor, so where the average investor tends to not make money. And so when crypto cannot create money out of thin air, when it's actually a sophisticated system of moving money from the not so well informed to the better informed, then how can we become better informed over time? Because surely there's also a luck component involved, but there are some people that tend to win long term. Now, it's obviously not easy to become part of the minority. If we are not launching a project and we know more than the rest about that project, then how can we still become insiders? I think the best answer is to try to figure out what the insiders are doing and then simply copy trade them. For example, over here, we've got the Martini guy, and he bought the Chippy token when the market cap was still at $455,000. Now have a look at the comments on that wallet signal. The Martini guy tweeted about Chippy 2 hours after he has bought himself. And so since we are in a market without much regulation, and since we are in a market that does not produce any wealth, it's just transfer from one to another, it's all about figuring out an unfair advantage. And the unfair advantage of Martini guy is to simply have a following, right? He's just buying and then he tweets about it, and then the price goes up by more than 50% in just a few hours. Here's, by the way, his YouTube channel. He's got 150,000 subscribers. And so when we know what the insiders are doing, when we know what the influencers are doing, we can replicate those trades. Now, the art is in finding the right wallets. And we are tracking 12 wallets of Martini guy. In total, we are tracking more than 500 wallets. So 12 are by Martini guy, but we've got a lot of other influencers as well. For example, check out this signal over here. This is YouTuber Jesse Eckel. He bought $10,000 worth of the winner token on the 2nd of May. And surprise, surprise, on the 6th of May, he published a video about the winner token. And so, of course, the price also appreciates in the top by almost 50%. And so really, it's a game of attention. It's not a game of fundamental analysis. Most YouTubers, they simply just buy the asset and then they promote it on their channel. And then later on, they might sell it at a higher price. Don't get distracted by all the noise. We are also following Alex Becker, for example. So we've got 12 of his wallets. We are tracking Crypto Banter. We've got 33 of their wallets. And here we've got Brian Young, who, by the way, bought the virtual token extremely early. And we've got 5 of his wallets. So how do we get all of that data? How do we know what influencer holds what kind of wallet, and how can we then create those signals that we can actually buy and sell with them? The answer is through on-chain analytics. So there are several approaches. We can, for example, look at what kind of NFTs does somebody hold. We can then see, are there maybe potentially deposit addresses on centralized exchanges? Did other major deposits happen to the same kind of wallet? Are those wallets potentially connected? We can also look at prior purchase histories. So let's say we've got an influencer that talked about very small altcoins in their Twitter or in their YouTube. And then we look at wallets that held all of those altcoins and that potentially bought them also before the tweet or before the YouTube video. Then we've probably also got the right wallet. We can then afterwards confirm this, right? We can look at what is the wallet buying next. Is there again another tweet or another YouTube video on this? If the answer is yes, it's probably the right thing. We're then continuing to track it. And so I've made an entire video playlist on how to find different wallets and how to track them, how to then get the signals and how to interpret the signals. And so our entire community is trying to find new wallets, discussing this in the wallet research channel. And then once we found an agreement, we add this to our influencer trade tracking channel. And so the idea is pretty straightforward. We're trying to generate as much outperformance as possible that in the end, the membership more than pays for itself. Now there is some funds needed, right? We can't just trade with a few $100. I think the best portfolio has at least $5,000. Once you are at 5,000, you should be able to make that money back. Now, if your portfolio is larger, then you can consider to potentially sign up for yearly as well. First of all, there's a discount involved. So there's $250 off. But secondly, there's also a 1 hour free Zoom call. So in case you've got a larger portfolio in crypto, but also outside of crypto with other asset classes, and you could benefit from a direct one-on-one call, the yearly membership might be for you. If it's your first time here, feel free to subscribe. I publish this regularly. A like would be very much appreciated as well. It helps the channel grow. See you next time on YouTube or see you in Premium. Cheers.